Hey, welcome to the Prosperous Agent. This is Todd Baker, Certified Mortgage Planner, and today is September 28th, 2012. And today I am broadcasting from my home office in Prosper, Texas. Had some rain, was out in McKinney for a little while with some heavy rain, and I sure wish we got more of it here in Prosper because all of our ponds need it badly. Today's show, we're going to talk about three different things. First, there's some news, both in FHA and USDA I want to share with you. And it's some news that you're going to be able to, number one, use to create some urgency with your clients, also add value in that you're making them aware of some possible changes that are coming up. And also talk a little bit about some USDA changes I emailed out to everybody today. And then finally, we're going to finish up with talking about a great way to give a gift to a client of yours. So first off, FHA. The FHA Emergency Fiscal Solvency Act of 2012 was overwhelmingly passed the House, and it's on its way to the Senate. And one of the things that it does is it grants the FHA the authority to raise the annual mortgage insurance premium to 2.05%. And let me tell you how significant that is. The way FHA financing works is, first of all, there's a county loan limit in each county in the United States. And most of our North Texas counties, that amount is $271,050. And probably most of you already know that. And then you can finance 96.5%, hence 3.5% down. Sellers allowed to contribute up to 6% towards closing. The down payment can be a gift, so it's a really good program. But FHA protects itself against loss two ways. It creates a reserve fund through both an upfront and an annual mortgage insurance premium. And so the way the upfront works is it's a percent. It's 1.75% of whatever the base loan amount is. So for example, here, let's grab my calculator real quick. Let's say that you had a purchase for $200,000 times 96.5%. The loan amount would be $193,000 plus 1.75%. That'd be the base loan 193 with the upfront MI. It's 196,377. Okay, so that's the total loan amount. The upfront gets financed. It's not paid out of pocket by the client. That's why you always see the base loan amount and then the base loan amount with the MI. The annual is in a percentage of that. So right now it's 1.25% of that. Okay. It's $224.54 per year, but then you divide that by 12, so it'd be like a couple $100 a month. On average, I mean, for that purchase price, it'll go up almost $100 a month. Going from 1.25% to 2.05% is an unbelievable jump. It blows away any kind of private mortgage insurance. In fact, here's the history. 2008 FHA was at 0.5. 2009 it went to 0.55. 2010 0.9. 2011 1.0, and then this year it's 1.25. So it's been creeping that way, and part of it is that the reason given is dwindling reserves. Okay, I think there's something more to it. I think that the government really wants to start routing people outside of FHA, or at least limiting the numbers of FHA a little bit, because what happened is they went from a very small market share to like 30%, and I think they just think it's too big. And so either way, even if it's just a conspiracy theory and I'm wrong about that, the fact is it's probably coming in spring. So that means that if you have anyone that was on the fence, they need to get moving now. And it also means that what we always talk about, what I talk to you about mortgage planning and how it relates to real estate and the practice of real estate, why this is so important. You have to have a plan. Our clients, your buyers, my borrowers need to have a plan well in advance that they can execute. It empowers them, and then have a plan for the long term on how to manage the mortgage. And with something like this is a way to create urgency and say, hey, you might have clients that are in your pipeline right now that won't qualify 4 or 5 months from now. I know I've got some, and I'm going to have to contact them and plan a little bit. That means maybe we pay down a little more debt, maybe we buy a little less house, but those are the kind of things to deal with a DTI problem or a debt to income issue that will be raised with that. Second thing is USDA. I sent you all a list. USDA had a new rural definition that was going to exclude several local cities from USDA funding, and they've now, out of the blue today, suspended that till March 27th. That's a big deal. Let me just read you the cities. It's Seagoville, Little Elm, Forty, Midlothian, Crowley, Azle, Glen Heights, and Red Oak. Still available to March 13th. Now, look at what I sent. And if you didn't get it, send me an email. I'll resend this to you about USDA financing. It is a fabulous program. 100% financing. So it's zero down. Okay. Rates are really low. They typically tend to be down there with FHA or lower as far as the rate. There is an upfront funding fee like FHA, but only until recently there wasn't any mortgage insurance or annual fee. There is now, but it's only 0.4. So it's a huge, the payment difference between USDA and FHA is huge. It's a huge difference. So it's a great program. The sellers allowed to contribute 6% towards closing, 620 credit score. They have their own automated underwriting engine. It's called GUS, which is the guaranteed underwriting system that we use to do the automated loan approvals, and then we underwrite and we fund them. So it's a great program. Last but not least, we're talking about a gift they won't forget. I know many of us partake in what a great practice it is to go give some sort of gift to your buyer after close. I know gift baskets, sometimes gift cards and whatnot, and those are always good things. I think they're always good things. But I'm going to throw out another thing, which is the idea of giving them a book. And you might think a book, but hear me out. When you buy a book, first of all, along the transaction, in the process of your transaction, you want to be building a relationship with your client. What I always do is my clients become my friends. I literally have like 1,500 people in my database that I've worked with, and I know all of them. I can call them. Literally, they're in my cell phone. I can call them. They'll say, "Hey, Todd, how's it going?" And I stay in touch with them. And it adds a lot of intangible value to my life, by the way. It's really something that's pretty cool. But it also adds, tangible value to my business because the folks remember me because I stay in touch. So giving books can be a great thing. And here's why. Is during the process, you get to know people's interests, what they like, what they may need. You can go do your own book reviews on Amazon.com just by typing in searches. You can even read part of the books. And the cool thing is you can then put an inscription on the front of the book. And there's some ideas in here that I'm sending over to you. For example, this is a great read. Hope you enjoyed it as much as I did. Now, if you put that in there, you might want to at least read the review or make sure you read the book. But I give a lot of books. Like, for example, I'm going to be doing shows about how to win friends and influence people. It'll change your life if you haven't read Dale Carnegie's classic. Or for us, Think and Grow Rich by Napoleon Hill. For my clients, The Millionaire Next Door. That's a book I would give quite often to really drive home the things I'm trying to teach. My goal is to help the regular folks become independent. Okay, so that's the kind of information I give out to them. But you can say, very best wishes to you in your new home. So, and then you hand deliver that. So it's actually more affordable than many gifts, and much more personal and something they can remember. And so think about that as a gift idea next time you close. So with that, I'm going to wrap up. I hope you have a great weekend. I will talk to you all next Friday. And until then, take care. Bye-bye.